In today's video, I want to go through a series of deals that I've done in 2024 by quarter, deals that I've either funded or just participated in. And what I want to do is go through the highlights of the deal and let you know what went right and what went wrong. And if I had to do it all over again, what would be the takeaway? Now, if you could do me just one little favor before we get started and hit that like button so other people like yourself can find this information on the internet. In addition to it, in 2025, I'm going to be building a very comprehensive residential loan officer course that I'm really excited about. So if you want to check it out, there's going to be a pre-sale available for you via link in the description of this video. In addition to it, if you don't know who I am, my name is Zevi Shaffer and I'm an owner of a company called Brook right here in LA, California. And in 2025, I am going to be looking for new loan officers to join our company. So if you think you might want to learn more about it, perfect opportunity. Check out the link in the description and maybe you could join the team. With that, let's get started, all right? Going through these deals, why would I pluck them? What could you learn from it? First quarter, I had this one deal which was a business credit line. Now, mind you, this is an old client of mine that needed a credit line. They just needed more money and they didn't want to touch their residential real estate. So what we ended up doing is going to the lender, the bank, where they had their business relationship. And we worked together with them to extend a line of credit against the actual business versus against the house. And it turned out to be super easy because the lender already had a pre-established relationship with this borrower and there wasn't any kind of a credit line established or in place. So putting one together really wasn't that difficult. I just had to iron out the terms of the agreement, do light negotiating with the lender, put it all in a term sheet, and then have the borrower sign and submit it to the closing agent so I can get paid on this transaction. I made a couple $1,000s from it. It was a fairly easy thing to do. And the reason I say that is because I also created the Part-Time Commercial Lender Academy, which is also available for you to check out via link in the description below. I always teach my students that they could do similar things to be able to earn a commission. So this type of deal was fairly quick and easy. It didn't require a whole lot for me to be able to secure a commission. All right, so that was the first deal, first quarter, one of a few. Let's talk about second quarter. Second quarter, there was actually a deal that came through for a 5-unit apartment building. And the interesting part about this is, to be fair, the owner wasn't 100% transparent about the status of the property. And so initially we've had it submitted as a 4-unit because that was the information that we've received. Now, there's no real way for us to validate whether there's 4 or 5 meters on the property. So an appraiser actually had to go out to the site and let us know, hey, you know, there's actually 5 meters on the property and therefore it is not a 4-unit. It is a 5-unit commercial property. So we had to reposition the deal. There are various ways to be able to put a deal like this together, and a lot of it depends on where the property is located and the financial profile of the actual borrower. This happened to be in a good part of Los Angeles, and therefore the A banks were pretty interested in it. I actually funded a private money construction loan to a borrower last year, and she went through the process of building a house by the beach. Ironically speaking, we've always discussed that I would take out that loan with a conventional lender. Now, because this person had reservations, it wasn't a clean deal. They actually consulted with another loan officer who put my commission and deal with the client at jeopardy. I immediately wanted to see a copy of the initial estimate. And it looked to me as if this party wasn't really able to put this deal together. They were using another lender to try to do this together and were charging this borrower a double commission. I brought it up to the attention of the borrower immediately, let her know she's being charged a double commission and I should take over the file immediately to be able to put this on track, give her the best terms, in addition to it, have her pay only a single commission. Now, it's a lesson learned because you think that your borrowers are naturally going to gravitate to you, but the truth of the matter is, unless you're in front of them, they could be talking to anyone. Anyone could try to persuade them to give them a better deal. So the takeaway here was that you should really stay in front of your borrowers, even when you line up your deals, knowing that you're expected to take some deals out with others. And this is very normal when you do a hard money deal, because it's considered a bridge loan. It's only good for a short period of time. And this was the case here. And I was happy that I came in just on time to be able to get my deal back and earn my commission. All right. So that was quarter number 3. Moving on to quarter number 4. This is something that I typically don't do, but I helped a borrower since the beginning of the year with an unsecured SBA loan, meaning that they would borrow money for their business. Now, the thing is about that, most of the loans that we do here are collateralized by real estate, but not this. This was just a straight business loan, somebody who needed working capital for their business. The borrower needed to build out a whole restaurant before he could actually get access to the funds, because when you're dealing with working capital, these are funds for operating the business, and you can't cross-mingle them with tenant improvement funds. So in this case, the lender required that the borrower complete the tenant improvements, get a certificate of occupancy before they would actually release the loan for the working capital. And this actually ended up taking the whole year. I wasn't aware that that was going to be the timeline, because my commission on this deal was only $5,000. And for me to be able to spend a journey of almost a year with a borrower for $5,000 would typically never happen. And so that was definitely the takeaway there. 2 other things happened this year that I thought were a complete learning experience. And I'll start with a minor one, which was actually doing a loan for a family member, basically just trying to help out, because this particular family member is self-employed. And so I figured that although I could get them an unqualified mortgage, which is basically using alternative documentation like bank statements, I wanted to do something better and try to qualify them with their tax returns. However, I was hitting walls. And then by the time we're able to transition the file and say, you know what, we'll just make this super easy, size up your bank statements and get you a loan, get you out the door, I didn't realize that they were exhausted with the process, which kind of caused them to veer away from my services to a less superior loan officer, in my opinion. This other individual was able to fund a much easier deal for them, something that would be very simple for us to do. And all I heard about is how great their service was. So the takeaway is, even though you know that you can go the distance for somebody, put them in a much better situation, if they just want to be out at the door in the quickest way possible, then I think it's really important that you listen to what they have to say. It's kind of like somebody coming on a car dealership requesting a red car, and you show them a really beautiful blue car that has all the amenities for a great price, but that's not what they ask for. And so again, that was my fault. And I learned from that experience that even though somebody might be qualified for something better, if they just want to be out at the door and take the first loan that you're able to get them simply because they don't want to deal with the process, that's exactly what you should do. So that was the learning experience there. And then the last one, which was by far the largest, was this year I had an opportunity to work on a $40 million acquisition. Now, I can't go into any detail about that. However, I did learn a great deal from that particular experience, simply because I've funded so many different private money deals throughout the years, and I have so many different relationships. This was a unique situation, which in my mind required a unique lender. I have actually teamed up with somebody who claimed to have all that sorted out through different funds that are associated with private money, family money, different things like that. And the mistake that I actually made is I brought him in as a partner into the deal, which I've never done in my life, simply because I've realized that this person would make the journey a lot easier. I've come to find out that that was far from the truth, and this individual was a broker capacity, and he had no other strings to be able to put this deal together other but reaching out to the lenders that we use to fund these type of deals. This put me at a huge disadvantage. Ultimately, I did lose the deal, I did maintain the relationship with the borrower, which is the most important thing. But I learned never to do that again. The only reason you would ever bring somebody in as a partner is if they're funding your deal, like meaning they have the money in their bank account. If they don't actually have the money and they're gonna broker it just like you, then what I would do is just offer them a split commission. As an example, I'm open to splitting my commission with you if you do bring in an investor who's willing to fund this deal. Otherwise, I will just go out and find an individual who actually has the money to be able to fund my deal. All right. So that was the takeaway. A lot of different moving pieces. And as always, I'm a student. I keep learning. As long as the wheel keeps turning, then you keep making money. And I think that's really all it really comes down to at the end of the day. But if you want to learn more about doing this, doing what I'm doing, then this year I've created the Part-Time Commercial Lender Academy. It's available for you in the description of this video. It's basically being able to put together either a private or a commercial deal. It's a full roadmap, start to finish, super easy to follow, plug and play. So feel free to check that out. If you have any questions about anything that we covered here, I always encourage you to drop them in the comments below, and I'll be happy to answer those for you. If you enjoy my video, as always, please hit the like button, like I said before, so other people like yourself can find this information on the web. We are hiring in 2025, so I would love if you are an originator and looking for a better place to originate, then come check us out. If you want to learn about originating mortgages, again, in 2025, I will be putting together a comprehensive course for residential loan officers. So check out a link in the description below. With that, totally appreciate having you guys here. Thank you for watching this, and I'll catch you again on my next video. Take care.